says FHA is the best option because it's easier to qualify, but what most people don't realize is that this one decision alone can quietly cost thousands of dollars over time if it's not structured properly. Last month, I reviewed a file where a buyer chose FHA simply because it felt like the safer option up front. And by the time we properly compared it to a conventional loan, the difference in the long-term cost was already in the tens of thousands. And that's where this becomes more than just a loan choice. Because this isn't only about getting approved, it's about how much extra you're paying every single month and how long the cost follows you. Hi, I'm Kelly Arriaza, your mortgage and home loan expert with Nexa Lending. And over the years, I've helped hundreds of buyers navigate this exact decision. And what I've seen again and again is that most people don't choose the wrong loan because they made a bad decision. They choose it because they didn't have the full picture. So what I want to do today is walk you through FHA versus conventional loans in a way that actually makes sense. So by the end of this video, you'll know exactly which ones save you more money based on your situation, not just today, but the long term. Starting with the basics. Now, before we compare FHA and conventional directly, let's take a quick step back and simplify what a mortgage really is. Because once this foundation is clear, everything else becomes much easier to understand. A mortgage is simply a loan you use to buy a home where you borrow money from a lender and then pay it back over time in a monthly payment or a monthly installment. That includes both principal and an interest. And while that sounds straightforward, the structure of the loan is what determines how expensive or affordable your home actually becomes over time. And with that in mind, let's now move into the two most common options that buyers choose between FHA loans or conventional loans, because this is where the real differences start to show. FHA loans, why do they help you get into a home sooner? Let's start with FHA loans because for many buyers, this is the entry point to home ownership. An FHA loan is backed by the Federal Housing Administration, which allows lenders to take on less risk and return, be more flexible with approvals, and this is exactly why FHA loans are so commonly used by first-time homebuyers or those who don't have perfect financial profiles. So if you're someone with a lower credit score, limited savings, or you're just starting out, FHA can make a lot of sense because it allows you to get into a home with as little as 3.5% down. And the credit requirements are generally more forgiving. As we go on a layer deep, one of the biggest advantages here is something called a manual underwriting system, which means instead of relying only on your credit score, a real person can evaluate your financial situation or your financial behavior, like your rent, payments, utility, and consistency over time, which can make a huge difference if your credit history is limited. Now, as helpful as that is, this is the point where we need to balance the conversation. Because FHA makes it easier to get approved, it does come with a trade-off. With FHA's loans, you are required to pay mortgage insurance. And in many cases, that insurance stays with you for the life of the loan, unless you refinance later, which means that while FHA helps you get into a home faster, it often becomes more expensive the longer you stay in that loan. So with that understanding in place, let's now shift to the other side of the comparison, where the long-term picture becomes clearer. Conventional loans, where long-term savings comes in. Now moving into conventional loans, the conversation starts to shift from accessibility to efficiency. A conventional loan is not backed by the government, which means lenders take on more risk directly, and because of that, the requirements tend to be stricter, but at the same time, the benefits can be much stronger if you qualify. These loans are typically best suited for buyers with stronger credit, stable income, and more established financial profile. And while you can still get into a conventional loan with a relatively low down payment, in some cases, the real advantage is not just getting in, it's what happens after, and this is where things really stand out. Unlike FHA mortgage insurance on a conventional loan, it's not permanent. And once you build about 20% equity in your home, you can remove the PMI, which can significantly reduce your monthly payment and save you money going forward. On top of that, borrowers who qualify for a conventional loan often receive better interest rates, which further lowers the overall cost of borrowing. So while conventional loans may require more upfront strength, they often become the more cost-effective option over time, which is exactly why we need to look beyond just approval when comparing the two. Shifting the way you compare these two. Now that you've seen both sides, this is where I want you to shift your perspective. Most buyers compare FHA and conventional based on how easy it is to qualify. But in reality, the more important comparison is how much each option costs over time. FHA is designed to help you get into a home sooner, which is incredibly valuable if you're just starting out. But that convenience comes with ongoing costs that don't go away easily. On the other hand, conventional loans may be harder to qualify for at the beginning, but that gives you more control over long-term costs, especially with that ability to eliminate mortgage insurance and potentially secure a better rate. So instead of asking which loan is easier, the better question becomes whether you are prioritizing getting into a home now or saving more money over time. So what actually saves you thousands? And now that we've built that context, let's answer the question directly. If your priority is getting into a home quickly and your credit or savings are limited, FHA absolutely would be the right move because it allows you to enter the market sooner and start building equity. But if you have the ability to qualify for a conventional home loan, especially with good credit and stable income, that's where the long-term savings typically happens, because removing that mortgage insurance and securing a better rate can significantly reduce your overall costs. So when you look at it clearly, FHA tends to save you upfront, while conventional tends to save you over time. Thinking about this strategically, and this is where a lot of smart buyers take it one step further. Instead of viewing this as a one-time decision, they treat it as part of a long-term strategy. In many cases, buyers start with an FHA to get into the market. Then as their credit improves and they build equity, they refinance into a conventional loan later, allowing them to transition from accessibility to long-term savings. And when you approach it this way, you're not choosing from one over the other. You're using both at the right time to your advantage. So as we wrap this up, remember that choosing between FHA and conventional loans isn't just about getting approved or going with an easier option. It's about understanding how each choice affects your finances over time and making a decision that truly fits both your current situation and your long-term goals. The difference between these two options isn't small. Depending on how your loan is structured and how long you stay in the home, it can add up to tens of thousands of dollars. And if you're starting to see this as more of a strategy than just a simple choice, you're already ahead of most buyers. That level of awareness is exactly where the better financial decision begins. If you want help breaking down your numbers or figuring out which option actually makes the most sense for you, that's exactly what I do every day. I'm Kelly Arriaza with Nexa Lending, your mortgage and home loan expert. I help buyers make clear, confident decisions so they can move forward without costly surprises later on. If you're trying to figure out which loan truly saves you the most money, then don't leave it to guesswork. Let's take a closer look together. You can call or text me directly at 801-548-0162. You can also book a quick strategic call with mycalendarly.com on kellyyourmortgageexpert.com. And if you're serious about buying or investing, make sure to follow me at Kelly, Your Mortgage Expert. Let's make your next move the right move.